Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within corporate filings, and the latest Cohen and Steers Real Assets Fund report is no exception. Get ready for some eye-opening insights, because this isn't just numbers, it's a story of market performance and investor strategy. As always, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below to keep the conversation going after the video. Alright, so let's dive into the Cohen and Steers Real Assets Fund's semi-annual report for the period ending June 30, 2025. This is essentially a mid-year checkup on how the fund is doing and what's driving its performance for investors. We're going to look at the numbers for Class A shares, first known as RAPAX. It's important to see how the fund performed and what factors influenced that performance. Cost of a $10,000 investment, veg LAE scroll, and hypothetical $10,000 investment in Class A shares. The costs over the last 6 months were about $60. This represents an annualized cost of 1.5%, which is pretty standard for this type of fund. Now for the juicy part, the performance. The Class A shares saw a total return of 9.112% in the first half of 2025. That's compared to its blended benchmark, which returned 8.13%, and the general MSCI World Index, which returned 9.47%. So the fund slightly underperformed the broad world index, but beat its own specific benchmark. What made it perform this way? Well, the report highlights that picking the right stocks and putting more money into global natural resource companies helped it do better than its benchmark. For example, the fund avoided or had less in paper packaging companies because those stocks decline due to lower consumer spending. This smart positioning helped boost returns. Real estate also played a big role. Good picks in US and Australian real estate like Welltower and Crown Castle in the US and Charter Hall Group in Australia added to the performance. Welltower's rise was linked to better signs in the senior housing market, and Crown Castle benefited from selling a business. In Australia, Charter Hall did well because of more deal and fundraising activity. Looking at the growth of a hypothetical $10,000 investment over the years since 2015, we see some interesting trends. Back in June 2015, our $10,000 would have been worth around $9,550. Fast forward to June 2025, that same $10,000 investment would have grown to about $1,494. That's a decent gain over 10 years considering market ups and downs. Scroll up average annual total returns, text such a preview, 2025. Scroll T average annual returns are a good snapshot. Without sales charges, the returns look much better. The 1 year return without sales charge was 11.40%. Over 5 years, it was 10.24%, and over 10 years, it was 4.56%, and over 10 years, it was 4.56%. These numbers show solid long-term performance though. The 1 year return is strong. The fund had net assets of over $1.29 billion as of June 30, 2025. That's a substantial amount of money being managed. What are they investing in? The top 10 holdings show a focus on real assets and some diversification. SPDR Gold Mini Shares Trust is the biggest holding at 3.8%, followed by Welltower Inc. at 2.2%. This mix of gold, ETFs, real estate, and even a short-term corporate bond ETF shows their strategy of real assets. Crow Stratch Top that's 6x Talks Kreuz X Arts that's X Arb R Garbled Real Estate Securities X Arb Sat Eds A that's Sev Tev 2 Camp Tev Tis that's R Twite Ets X X Sal Garb 25.8 Sats X A J Tal 20 Che Garti Tev Jat Te J Che Che Say Yeah Te Real assets approach, which includes things tied to physical goods like oil, gas, and metals, as well as property. Includes things tied to physical goods like oil, gas, and metals, as well as property. Includes things tied to physical goods like oil, gas, and metals, as well as property. To offer a strategy breakdown really paints a picture. Global real estate securities make up about 25 Taitsar. Job safety breakdown really paints a picture. Global real estate securities make up about 25 Twentra Taita. Starcha de train nol labai paints a picture. Charian tide of Trensaf Chaye. Percent of the fund and Kemedi futures are also a big chunk at 25 to Crowy Tom 7 dot Civ Force, 7 Chevs 4 Thavta Tevs, Tick 6 Dalfs Dal 5, Tev to Gal 5 Dal Por 5 to 5 Citra Trades. United States Kaf to Gal 50 Kaf to Dal 50 Kart, Hisif Trof to Cave, R6 to Call 6 a Get Trade. All the Kaf to Kat to Kev J Force a Cat say Kaf to Guide says, it has a 50 or Ken say it's heavily weighted towards the United States at 5%, being the next largest. This shows a strong focus on North American markets. Now let's briefly touch on Class C shares known as RAPCX. The performance here is similar to Class A but with a slightly different cost structure. Crow costs of a $10,000 investment, Kuyu's N-user, annualized Tiscroll, a $10,000 investment were $93, which is an annualized 1.80%. This is a bit higher than Class A, mainly due to the nature of Class C shares, which often have a deferred sales charge. Scroll for share class had a 8.67% total return in the 6 months ended June 30, 2025, compared with the blended benchmark and Bardo, which returned 8.13 1 kilo, which returned 8.30 on Coidits, net, which returned 9.47% technical. Scrolled, the total return for Class C shares was 8.67%. It trailed slightly behind Class A and the broader MSCI World Index, but still beat its blended benchmark. Next up are Class I shares or RAPX. These typically have lower fees for larger investments, all scrolls, costs of a $10,000 investment, IOLized. So I scroll here, the cost for a $10,000 investment, all affairs in scrolls here, the costs for a $10,000 investment were $41 or an annualized 0.80%. This lower cost structure often appeals to institutional investors. Scroll the share class had a 9.19% total return in the 6 months ended June 30, 2025, compared with the blended benchmark ANSI on Q1. EQ returned 9.47%, and the MSCI World Index, which returned 9.47%. Scroll Cursor shares performed very well with a 9.19% total return this period, outperforming both the benchmark and the MSCI World Index. This strong performance at lower cost is quite attractive for investors. When we look at $100,000 investment for Class I shares since 2015, the growth is even more impressive, starting at $100,000 in 2015. By June 2025, that investment bloomed to over $161,000. This really shows the power of compounding and potentially lower fees over the long haul. Let's quickly check out Class R shares or RAPAX to scroll, IAPAX to scroll you dollar annualized point ILS. G scroll Kester for $10,000 or 130% annually. Scroll the share class had a 9.03% total return in the 6 months ended June 30, 2025, compared with the blended benchmark of M1 Quanpor, which returned 8.131 Kamokan, which returned 8.13%, and the MSCI World Index Net, which returned 9.47%. Their performance was a solid 9.03% return for the period. Finally, we look at Class C shares or RAPCX, $10,000 investment AQSR, Chiavriari, Kia, annualized Drella, annualized Druscro. These shares also had costs of $41 or euro, welcome back to reemerge, and annually similar to Class I. Scroll the share class had a 9.21% total return in the 6 months ended June 30, 2025, compared with the blended benchmark in Micron 1 EQ, which returned 8.13%, and the MSCI World Index Net, which returned 9.47%. Dig Scroll SIG Class C shares actually had the highest return among the retail share classes, a strong 9.21%. Scroll Consolidated S-Scale Investments FCR to 85. June 30, 2025, unaudited chess scroll. To diving deeper into the investments themselves, we see a lot of detail here. The schedule of investments shows everything the fund holds. We already mentioned SPDR Gold Mini Shares Trust as the top holding, and Welltower Inc. is right there too. Then we see the SPDR portfolio, short-term corporate bond ETF, and iShares Gold Trust. This is a very diversified real assets portfolio. Scroll Consolidated E-Scale of Investments, continued Ting UT5, unaudited T-Scroll. Scrolling down further, we see companies like American Tower Corp and Crown Castle Inc., which are big players in the communications tower industry, a key part of infrastructure. And then National Grid PLC from the United Kingdom, representing their global infrastructure exposure. Scroll consolidated SCalv investments and continued Axtio ND295 unaudited D-Scroll Keften Energy's sector. We see giants like Chevron and ExxonMobil alongside international players like BP from the UK and Total Energies from France. They also hold companies involved in gas distribution and pipelines, demonstrating a broad energy and utilities focus. Scroll consolidated investments continued Dix to New 10T5 unaudited Cheese Scroll. In the real estate section is massive showcasing their commitment to this sector. We see Digital Realty Trust Inc. for data centers, Avalon Bay Communities, and Invitation Homes for residential, and Simon Property Group for retail, all major players in their respective real estate niches. Scroll consolidated East Calvin Investments, continued Arctangent 5, unaudited 10 Scroll. 2, they also hold a significant amount in corporate bonds and US Treasury notes, showing a balanced approach with some fixed income to manage volatility. Scroll consolidated SCA of investments. Continued Actus FELA and ARP and June 30. 22.5 fixtures contract section is where things get really interesting for a assets fund. They are heavily involved in commodity futures like aluminum, Brent, crude oil, corn, copper, and gold. Scroll futures contracts tabula caber. Number cabinet referve Isabia contract scroll for aluminum. They have numerous contracts with expiration dates extending into late 2025. Scroll Bumment crude oil CUSA. Q-choose Crow and similar large positions in Brent crude oil futures. The fund is actively using these instruments to gain exposure to commodity markets. Scroll consolidated statement of operations. It's into 3025 unaudited T-Scroll. Looking at the statement of operations, we see the income and expenses. Scroll investment income to the Scroll P. The total investment income for the 6 months was about $22.4 million. Scroll expenses for total Scroll. Total expenses before any waivers were around $5.6 million. Scroll reduction of expenses, see note 2. 2-stub Scroll Kestia. But critically, they had an expense reduction of over $1 million thanks to fee waivers. This is a common practice to keep costs down for investors. Scroll net realized and unrealized gain loss to Kescroll. Scroll of the fund saw a net realized and unrealized gain of over $83 million, which significantly boosted its overall results. Scroll consolidated statement of changes in assets. Unaudited tells you Apsafat. Let's look at the changes in net assets. Scroll net decrease in net assets, resulting from operations. Aliu Scroll operations added over $101 million to the fund's assets. Scroll decrease in net assets from fund share transactions. Up means money coming in from new investors and going out to those selling shares. Added another $151 million. This shows significant growth and investor interest. Scroll net asset value end of period. To Scroll to net asset value at the end of the period was over $1.29 billion, a healthy increase from the start of the year. Scroll consolidated financial attributes. Unaudited Dalvio showed selected data for a share outstanding throughout each period and other performance information derived from the consolidated financial statements. Scroll the financial highlights give us a per share view. For Class A shares, the net asset value per share at the end of the period was $10.75. Scroll net asset value end of period SES Scroll. Net for Class I shares, it was $10.76, reflecting their strong performance. Scroll you returned Kevichi Kev Scroll. Scroll the total return for Class A shares was 9.1% for the 6 months, not annualized of course. Class I shares came in even higher at 19%. Scroll later is the average daily net assets, Arbentis expense reduction, TGS Scroll the expense ratio net of waivers for Class A was 115%, and for Class I it was a very competitive 0.80%. These ratios are crucial for understanding how much of your investment is going towards managing the fund versus actual growth. Scroll portfolio turnover rate of Decios S10 Scroll. Kept the portfolio turnover rate was 47%. This means they bought and sold about 47% of the fund's holdings during the period. This isn't extremely high, suggesting they aren't constantly trading in and out of positions, but are more focused on longer term investments. Scroll to 1, organization and significant accounting policies. Caution, key part of any fund's operation is how it values its scroll. Key part of any fund's operation is how it values its assets, especially when dealing with less common investments like commodities and derivatives. They use quoted prices in active markets when available, but also rely on observable inputs and even their own assumptions for less liquid assets, following a hierarchy to ensure fair valuation. Scroll futures contracts. Scroll. The fund's use of futures contracts is a major part of its real asset strategy. These contracts allow them to gain exposure to commodities like oil, gas, and metals, and are subject to market risks and potential losses. They hold both long and short futures positions, indicating active management. Scroll derivatives risk KES in Scroll. To the report doesn't shy away from mentioning the significant risks associated with derivatives. Market risk, credit risk, counterparty risk, leverage, and liquidity risks are all present. The value of these instruments can swing wildly and magnified losses are a real possibility. Scroll now, my take on Cohen and Steers Real Assets Fund. Scroll to looking at the numbers, the Cohen and Steers Real Assets Fund seems to be navigating a complex market quite effectively. Their strategy of diversifying across real assets like real estate, commodities and infrastructure has paid off with solid returns outperforming their benchmark. A slight underperforming their benchmark, the slight underperforming their benchmark, the slight underperforming their benchmark. The slight underperformance relative to the broad MSCI World Index in the first half of 2025 isn't a major concern given their specialized focus. What's impressive is their ability to deliver these returns even with the inherent volatility of commodity futures. Their top holdings like gold ETFs and major real estate companies, along with significant investments in infrastructure and energy, show a well thought out approach to capturing returns from real assets. The fact that they are using futures contracts actively demonstrates a sophisticated approach to commodity exposure. The lower expense ratios for Class I and Z shares are particularly attractive and reflect a commitment to cost efficiency for those investors. The fee waivers also show a dedication from the management company to shareholder value. While the risks associated with derivatives and commodities are significant, the fund appears to be managing them skillfully, as evidenced by their performance and the detailed breakdown of their holdings and strategies. Overall, the fund appears to be a well-managed vehicle for investors looking to diversify into real assets, providing exposure to sectors that can perform well during inflationary periods. The fund's direction seems solid with a balanced approach to growth and risk management. Alright, that's our breakdown of the Cohen and Steers Real Assets Fund's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.